hello and welcome. My name is Andrew Thake, and I'd like to welcome you to this week's Minds and Money 5 at 5 show, which is sponsored by Murchison Minerals, Black Iron and Callinex Mines, and is brought to you in association with Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, which is 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. If you want to ask any questions, you've got a couple of options. You can either ask your question in the chat box chat box function, which is at the bottom of your screens, or also you can go and wave your hand virtually. We can unmute you and you can go and ask your question live. We'll always be having polling questions throughout the webinar where you can go and vote. And being towards the end of the week, we encourage you to bring along a glass of wine or beer to relax, sit back and enjoy. For this week's show, we have a base metals theme focus, and discuss this, we have a great line of guests. They are Jean-Charles Potvin, Chairman and Chief Executive Officer of Murchison Minerals, Matt Simpson, Chief Executive Officer of Black Iron, Max Porterfield, President and Chief Executive Officer of Callinex Mines, Jim McFadden, Principal Analyst of McFadden Research, and Alain Halimi, Executive Director of the Commonwealth Bank of Australia. So without further ado, I'd probably like to dive in with an opening question to you, Alain. I should add that though you're based with the Commonwealth Bank of Australia, you're actually based in New York. So I'm just curious to see as to what is the outlook for mining that you're seeing at the moment in New York, and are there any kind of key trends or thematics that you're seeing?
Yeah, sure. Thank you, Andrew. Yeah, I guess, generally speaking, the outlook is fairly positive. I guess you have a couple of mega trends, I will say. I'll start probably with the first key one, which probably started right before COVID, which is around energy transition. I remember way back, probably around October or November 2019, you had a couple of large funds which basically made public statements around trying to reallocate some of their portfolio allocation toward ESG-friendly corporations, or at least corporations which will take a careful look around ESG parameters. So I think the pandemic has probably exacerbated that, and probably we're under a very good momentum and trend around energy transition. So that's, I think, trying to translate that into the mining industry and commodity prices, I think that's probably going to spur some of the discussions around another super cycle. And also we've seen a number of commodities which have positively reacted to that. My view is I think we're just at the beginning. Energy transition is going to be fairly big. Just seated here in the US, under our group here, we not only cover mining, but also we cover the financing of power generation. And there is a lot of activity around solar financing, wind financing, battery storage. So you have really, I think, a willingness now in the US and I think into other regions of the world trying to change the way the reliance from the fossil fuel industry to generate electricity and trying to transition the grid to more cleaner energy. That will translate and has started to translate into high demand for commodity prices, base metal critical into that. Clearly, if you want to decarbonize your power grid, you need copper. Without copper, you cannot achieve anything. So I think the outlook is fairly positive from that perspective. The other mega trend is around, urbanization from the emerging markets. That has been going on for quite some time. It's not going to stop. China is leading that. More and more, people coming into cities. So that's going also to support a significant demand. I guess, probably on the other side, I think on the demand side, there is a very positive outlook. I think the question is more on the supply side, where mining is not necessarily an easy industry where, you have a price reaction and then you have the supply reacting immediately. Just to get a mine to switch on the light, it takes time, it takes many years, a lot of hurdles. So I think we'll probably see some challenges from that perspective in terms of gap for certain commodities. But I think it's generally positive for the mining industry just to have some sort of supply gap. The other thing I think probably to watch carefully is around not repeating the same mistakes which happened back during the past cycle. I remember back in 2010 or 2011 where the industry probably got tarnished a little bit as probably, I would say, a destroyer of value, where you had number of companies which suffered from inflationary costs for the industry and making very, very thin margin. Also, the lack of discipline from certain management team as well. I think that's going to be also a big challenge because, you know, when you're facing high commodity prices, obviously you may have big spending plan, but I think we'll probably see these big trends coming on over the next couple of months of years.
Okay, thank you very much for that. Bringing in Jim McFadden of McFadden Research. Perhaps you can just say us a little bit, I guess, first of all, about who McFadden Research are. But also, I guess, I'm just curious to see as to what mining trends that you're seeing. Do they kind of correspond with what Alain has just said, or are you seeing some different trends?
A little more specialized. And the first question, you know, what I do is I'm a consultant to a couple of different hedge funds and also write some research for various publications. The two commodities I follow the most closely are iron ore and gold. Iron ore, as I'm sure Matt Simpson will discuss quite shortly, has had a tremendous run, about doubling in the last year. Generally, there's people are waiting for it to come back in. It has been very resistant to that. To us, it seems like iron ore represents a pretty reasonable value, even still here. Second, the price of gold, which gold has been hurt by people's embrace of Bitcoin, and it sure looks to me like Bitcoin is awfully stretched now in relation to where gold is, but those are probably the two commodities I look at the most closely.
Mm-hmm. I think that probably leads into a polling question that I'm going to ask my colleague Alain to bring up onto the screen. For the projects who are presenting today, they are all based in Canada, but they all are mining a different range of minerals. So just a bit curious to see as to which the following commodities you think perform the best in 2021. Just kind of giving in mind your previous comments, Jim. Would it be like iron ore, or would it be one of the other sort of five up there?
This is to me or to Alain?
To you, Jim.
Okay, in general, I tend to like the iron ore fundamentals, and of the ones you selected, I think I'd be voting in that direction.
Okay, and then for yourself, Alain, which way would you be voting and why?
Oh, I guess probably continuing with the trend around energy transition, I'll be voting for copper. You know, as I said, without copper, you cannot decarbonize an economy. And based on what we're working on and what we see actually around as I said, power generation infrastructure as well, there is significant demand. So I think copper will probably outperform. I have to say, silver could also be interesting to watch as well, but I tend to agree with Jim. I think silver may probably be fairly volatile, especially around the Bitcoin discussions at the moment. But I think the industrial demand for silver is probably there. It's just around going to probably suffer with because of what's happening with Bitcoin. But I'll go for copper.
Yeah, I think we can have the polling results up now, Alain. We see that copper is the clear winner of the poll. It's interesting that certainly at Mines and Money's end, where we've seen the greatest increase in mining clients over the last 12 months has definitely been in silver mining companies. We've always had a strong showing of gold mining, but definitely silver is the one we've seen the biggest, probably year-on-year increase. I'm just curious as a final question, sort of both of you, and again perhaps Alain first. So Bitcoin sort of frequency comes up in sort of various sort of discussions that we have. What do you think is going to happen with Bitcoin for the rest of 2021 and above? Obviously, it was such a phenomenal performer like last year. Is it more of the same this year, or is it going to have a massive correction? Will it become like a default currency, or is it end is nigh?
That is a very, very hard question. Look, to be fair, I have no clue where Bitcoin will end up. I don't think anyone will know. I think, look, generally speaking, there is a lot of enthusiasm right now about Bitcoin. Personally, I like hard assets. I think the technologies itself is very interesting around Bitcoin. When you look at probably the history of money, we've been using initially, human race has been using, for trading shell and other stuff. And then as we kept developing our economies, we started to dematerialize the money, okay, with credit cards, etc. So I think the cryptocurrency itself is fairly innovative, and probably at some point that's something which is going to be part of our daily life. Right now, it's not controlled by anyone. So personally, I think for the long term, I'm not so sure that's going to be sustainable. I don't think that a central bank or a country will probably try to shift dramatically toward Bitcoin. When you control a currency, it's fairly important for a country. And we've seen that right now with the pandemic, where you had the Fed and all the central bank pumping money into the economy. And if you don't necessarily control your currency because it's dematerialized and it's not controlled by anyone, then you cannot necessarily you lose your sovereignty, your sovereign power. So that's something very interesting to watch. So for the short term, look, I'm not sure. I'm a believer into precious metals. So I think at some point we'll probably see a correction, and probably gold, silver will probably get back to where it should be, and that could probably be at the expense of Bitcoins.
And Jim, what do you think will happen to Bitcoin in 2021?
I mean, there's so much emotion involved, so it's really hard to be precise. But I will give you two statistics. 18 months ago, the total value of Bitcoin equaled about 0.4% of the U.S. stock market. Now it's 2%. And that's an enormous move. From the same token, gold. For the longest time, Bitcoin, the capitalization of Bitcoin was about 2% of that of gold. Now it's 13. I mean, these are enormous moves. You would think that some sort of regression to the mean occurs. I mean, on every chart, this looks like the last few stock market bubbles kind of on steroids. But having said all that, voting against this and voting based on numbers and figures has been a plan for not so good returns for the last handful of months. Bitcoin has risen, I think, 450% just in 6 months. I mean, having said all of that, though, if we were saying 3 months from now, is it higher or lower? I think I would bet on the lower side.
Okay, thank you very much for that. I think that without further ado, let's move on to the first mining update of the show. Murchison Minerals is focused on its high-grade zinc, copper, silver Brabant Mackenzie project. Jean-Charles J.C. Potvin is co-founder of Murchison Minerals and was president and CEO of Murchison from inception to November 2015 and resumed that role in December 2018. He's been a director since 2007. Over to you, JC.
Thank you, Andrew. So let's move forward. So I will be talking about Murchison Minerals. We have two great projects, one in Saskatchewan called Rabbit Lake, and the other one in Quebec called HPM. So just looking at the highlights, we have a pretty good experienced management and board with a proven record of success. We've worked as a group pretty well all over the world. We're operating in Quebec and Saskatchewan, so those are the two blue chip areas viewed to be politically safe. I must say that political risk exists everywhere, but those are probably the safest areas in the world today. And our projects provide investors exposure to cobalt, copper, nickel, zinc, a bit of gold, and a bit of silver. And so we're exposed to it's a collection of critical minerals that are needed in this green energy revolution. So the Brabant Mackenzie deposit lies in a geological environment very similar to the Flin Flon Lynn Lake area in Manitoba. It's a VMS type deposit. It already has a fairly substantial resource of 2.1 million tons of over 10% zinc equivalent in the indicated category, and 7.6 million tons of actually a bit over 6% in the inferred. The ore body remains open, and there's a very, very large land position covering about 626 square kilometers with well over 120 different EM conductors that are worthy of following up. And there's also potential for stratabound gold deposits in the area. We have a very close relationship with the local indigenous communities and the regional and provincial governments. And we own 2 houses in the village of Rabbit Lake, and we get along quite well. The HPM project is basically mostly a nickel, copper, cobalt project. The best hole to date has intersected 1.74% nickel over 43 meters. It's a large land position, and we have a VTEM survey that is just started to be flown, in fact, today. So next slide. So look at the market capitalization. It's about today it's actually less when you net out the working capital. It's less than $5 million US. And with that, as I said, in the Rabbit McKenzie deposit, if you were to just put a value, or look at the value in the ground, if you could use that terminology in both categories of indicated and inferred, we'd come up with about a bit over $1.7 billion, which in fact that's equivalent to about 1 million ounces of gold if you were to do a gold equivalent. So it is and there's definitely potential to identify some new deposits, and excellent infrastructure. So very large land position, and Quebec is very exciting. We have 10 Gossan areas. Gossans are 7 of those have been sampled very briefly last fall, and all the samples came back with nickel, copper, cobalt values. So it's very exciting, and we're anxious to get back in the field this coming summer. Next slide. So just coming back to, this is the last slide. That's on the Rabbit McKenzie deposit. You can see it, the location on the map on the left-hand side. But what's really exciting is just the land just to the north of it, what we call the Betty Zone. This is an area that was staked just recently, back in January, and we drilled a couple of holes, did downhole geophysics, and identified a large plate, 700 meters long, 200 meters wide. So what we call the mesh wall plate is a geophysical term. Those 2 holes look like they're off plate, so we are anxious to resume drilling on that. And given it's on the same horizon as the Rabbit McKenzie deposit, it's just 1 kilometer to the north. I think there's a real good potential that we have another ore body. So time will tell, but it's really exciting times. So next slide. And of course, there's a lot more information on our website, and so murchisonminerals.com, and we'll just go and check it out. And
sure. Thank you very, very much for that. If anyone has any questions for JC, please go and post them into the chat box. And actually, we've got a question from Dale, actually, in the audience. What is your cash run rate and path to profitability timeframe?
We run a very lean and mean operation. The overhead of the company is $350,000 Canadian per year, which is pretty good for a public company. So we have about 1.3 million in working capital. Clearly the area that absorbs the most cash is drilling, and so you're limited to the capital you have to do the drilling. Now it's across Canada right now, it's nearly impossible to get a drill. Everything's tied up probably till September, and so we have time to generate a lot of news in the interim, and perhaps do a bigger financing towards September for drilling this fall. But we certainly have lots of targets to follow up on.
Okay, thank you very much for that. Bringing in Alain from Commonwealth Bank of Australia. Obviously, in JC's presentation, he talked about it being part of the green energy revolution, which ties in a bit about your opening comments about the energy transition. I was just wondering if you had any thoughts about the project or any questions for JC.
Yeah, sure. I guess I probably have one question and a few others as well. So in terms of key milestones for 2021, do you have any specific milestone you'd like to achieve?
Yes, we want to definitely do detail mapping on these 10 Gaussian areas on the HPM project. That's something that we'll be doing in June, July of this year. As I said, these 7 of these 10 Gaussian areas were sampled, by basically a prospecting team, and every single sample collected had some metal values, it's pretty exciting when you have a rock that's basically weathered out, rusted out, and there's still some very decent metal content. Voisey's Bay, when you look at the core of the drilling that's been done on HPM, it's very limited drilling. That's the last drilling was in 2008. You take the core from our project and you put it next to the core collected at Voisey's Bay, and you can't tell them apart. So it's pretty exciting. There's a lot of metal on surface, we believe that we will have all kinds of exciting news by the end of the summer. Subject to assays coming in, the labs are all running behind too. So,
Thank you. Jim, do you have any kind of questions or do you have any questions for JC? Can we unmute Jim? Can we unmute Jim?
You can hear me now?
Yeah, we hear you now, Jim. Yeah.
Okay. Just a little more detail. If you're able to acquire drilling equipment by September, so in round terms, what might we see you do then? And then second, you alluded to maybe a financing around the same time. Any kind of ballpark parameters of what that might entail?
Well, that's a good question. It's obviously first of all, we have a pretty good treasury right now at about 1.3 million, a bit over that. So clearly, when you're doing drilling, the cost is about $300 a meter. So I mean, if you would go through that million very quickly, but if you can define some very specific drill targets, and we have we have quite a few of those. We want to generate more news and get the stock up before we consider doing any new financing. There's no critical need to do a financing today or in the near future. So we want to build the value up. I mean, the market cap is $5 million, and you get the equivalent. Huge land position. We already have an ore body. We have 10 highly prospective areas on the HPM project. We just need to generate more data, more news, or to highlight that we have some very exciting mineral potential on these two. And if I had to do some drilling based on the information I have today, I would definitely take my money and drill 2 or 3 holes on the Betty zone at the Brabbit Mackenzie deposit, because we have hit VMS mineralization off hole, like off plate. And so if you're hitting VMS to the side of a very significant EM conductor, the odds are pretty good that you're going to hit some new mineralization. And I think we're sitting on we're basically 1 hole away from a new discovery of a sizable deposit, the VMS deposit. So.
Wow.
Thank
I think on that sort of positive note, we'll need to sort of move on to the next presentation. But what you will see, JC, if you look in the chat box, function, you'll see there's 2 or 3 questions we weren't able to get around to ask you. So perhaps if I can ask in your own time, just to sort of answer those questions in the chat box. So thank you very much for that, JC. Very, very sort of interesting project. Now, without further ado, our next update is from Black Iron. Black Iron is a Canadian iron ore exploration and development company advancing its project in Ukraine to production. Matt Simpson is a former general manager mining for Rio Tinto's iron ore company for Canada. He also worked for Hatch designing global metallurgical refineries. Over to you, Matt.
Thanks, Andrew. So iron ore has actually been the top price appreciating mainstream commodity over the past year. And a lot of that's actually driven by recovery from COVID. We're seeing governments all around the world spending multiple billions, and in the case of the United States, as Joe Biden recently announced, trillions on infrastructure projects, building roads, bridges, rails. And whenever you do that type of work, you require quite a bit of steel. And that's what's led to the iron ore prices to climb to their 9-year highs that we're seeing today, where 62% iron is selling for about $177 and 68% iron is a record of $211. So our iron is red hot. And how does that apply to black iron? Well, our project is the top ranked undeveloped iron ore project in the world by two highly regarded market intelligence firms, being Wood Mackenzie, which produced the bubble chart on the left, and CRU, which has the bar chart on the right. With the bubble chart on the left, you can see that our Shimanivsky project has the highest after-tax internal rate of return and one of the highest iron contents. And in the bar chart, you can see that we're not just first quartile, we are the lowest cost undeveloped iron ore project in the world and on the brink of securing our financing for project construction. So we'll hit the next slide. With iron ore, the reason why the numbers are so good is it's all about moving large volumes of material at low cost. It's proximity to rail, port, power, and skilled labor that make or break the economics of your project. And the reason why the numbers are so good in our project, you're seeing an NPV with a 10% discount rate of 1.9 billion against an initial capital cost of construction of 450 million. And that's, by the way, using iron ore prices long-term of $62, when again, the price today is 177. So we are only 2 kilometers, or about 1 mile away from the government-owned rail, where we've confirmed capacity sufficient for our project. There are high voltage power lines that run right beside that rail, but the substation that we'll tie into is only 30 kilometers or 20 miles from site. And with that railway, we can hit 5 ports ranging between 230 and 430 kilometers away, also with confirmed capacity. So we're not building any major infrastructure. And what we are building and operating with comes from a labor force of 750,000 people, only 8 kilometers or 5 miles from site, where a highly skilled electrician, mechanic, welder makes about $5 an hour, if you can believe it. When I used to work for Rio Tinto here in Canada, I paid my frontline workers about $120,000 a year, and that was 30% of our operating costs. In Australia, you're paying upwards of $180,000 a year, where most of the iron ore is mined. In Ukraine, that same person's making $10,000. So that's why our costs are so low. From the ESG standpoint, for people that are really concerned generally about the environment, and we're seeing, I think, a global shift towards that focus, we're making a 68% iron magnetite pellet feed. So I appreciate that's a bit of a mouthful, but basically the higher the iron content and the type of iron, not only the higher the price, but also the lower the emissions that are generated in making a ton of steel. And in our case, our product is in the top 4% of quality globally, and it results in about a 30% reduction in the greenhouse gas emissions to produce a ton of steel compared to a 62% fines product, which is the largest consumed product in the world. Next slide, please. 2021 is shaping up to be an extremely exciting year for black iron. In 2020, we largely obtained expressions of interest to fund construction, and 2021 is about moving those all to binding commitments. So we already announced right around the Christmas holidays that we secured a $100 million royalty from a prominent United States-based family office. We've also announced that we've got expressions of interest from some major European banks for around 280 to 300 million of debt. And we're just about to announce a offtake agreement. So this is an agreement with a large steel mill, large trading house, where they want to secure the rights to purchase our initial production in exchange for making a large investment towards project construction. So in terms of big milestones, again, offtake is literally any day. We're now updating our feasibility study and bringing our environmental impact assessment into compliance with the Equator Principles standard. And in parallel to that, we expect to move to fully binding commitments on the royalty and senior debt this fall. There is some land that we need transferred from Ukraine's government. We already do have a memorandum of understanding signed by the Prime Minister of the country to transfer that land. We expect that to occur late this summer, and we should be in a position to start construction early next year. So lots of catalysts to help move the share price up and keep this going. So with that, Andrew, I'll turn it over to any questions that you or others might have.
Yeah. Well, I'm going to jump in with a question again from the floor from Guy LaBelle. And Matt's question is, what is the cash in the company, and are you contemplating a share issue?
So we currently have about 1.3 million US cash in the bank. Burn rate's about 110,000 a month, so we have lots of runway. That said, once we start to ramp up some of the activities at site, such as the feasibility study, the environmental impact assessment that's ongoing, we will look to do a small bridge raise, but we wouldn't look to do that until after the offtake is announced, upon which we expect the share price to be meaningfully higher than our current about 120 million market cap.
Okay. Bringing in Jim from McFadden Research. I know that this is that Black Iron is obviously a company that you sort of like work with. What are your thoughts on Black Iron, and do you have any kind of questions for Matt?
Well, on Black Iron, a little bit like Matt said, it does feel like, to me, this is a company which has, amongst almost any mining company I know, one of the, if things were to work out in the right direction, tremendous upside given the cash flow that they could generate in not too many years, and also when you factor in the multiples of cash flow that other comparable companies trade at, it is not impossible to think this stock could be a 10-bagger. It is, if you do the numbers, it is not an impossibility. A specific question for Matt. I think what he did highlight, the offtake agreement is in my opinion enormously important for this company. Can you provide any details as to how much, a bracketed range maybe of how much of an investment the winning steel company or global trader might be investing in the construction of phase one of the plant in kind of the winning offtake agreement?
Yeah, that's a bit of a sensitive one because we are just about to make an announcement in the next little while on that. What I can say, Jim, is that it will be a substantive amount of the funds that are required to round out the construction costs for the project. We had an extremely competitive process. We had most of the well-known global traders participate in that process. We also had some steel mills participating in that process. And we concluded submission of bids at the end of March, and we're now just going through all those different bids and selecting the optimal combination of not only the investment amount up front, because it's equally important on what the offtake terms are to make sure that we can maximize the sale price of our product.
And there'll be just one offtake, or might you pick not just one but two?
There'll just be one off-taker, Jim. Most of the trading houses do not like to compete with each other. They want to have exclusivity over the product because they don't want to compete to sell the product to a same customer. It is possible to have a trader alongside a steel mill, but we're only starting with 4 million tons initially, self-funding expansion to 8 about 3 years later. So with that kind of quantity, at least the first 4 million tons we've seen going to just one party. And all the bids we received, everyone wants the full 4 million.
Well, thank you very much.
Alain, do you have a question for Matt?
Yeah, sure. I guess, Matt, do you think you could probably break down a little bit how you'll finance the project between the senior debt, the royalty, the potential offtake prepayment, and also the equity, just to get to finance the construction capex?
Yeah, happy to, Alain. So it's 450 million is the initial capex, and of course that doesn't include things such as working capital, which is about another 30 million, value-added tax timing delays, which add about another 20 million, and then we also have financing fees that we need to pay our friendly bankers. So on an all-in grossed up basis, we need about 505 million, not including a potential cost overrun facility, which may or may not be required by the senior lenders. If we require a cost overrun facility, it's typically somewhere between 5 to 15% of the total capital. So we're talking about requiring about 505 to 570 million. We see that split roughly 30% debt, 40% equity. So we see bringing in roughly 300 million of debt, and then we'll have about 100 million of equity. We received expressions from 3 different construction companies, out of which we'll select one for $65 million in exchange for them being awarded the construction contract. And then we should be able to round out the balance largely through the offtake agreement.
Okay, thank you very much for that. Again, I think in the interest of time, we need to move on to our next presentation. But actually, Matt, if you look in the chat box function, again, you'll see there's a couple of questions we weren't able to get around to ask you. So perhaps in your own time, you can actually go and answer those questions in the chat box, and that would be great. Our next mining update is from Callinex Mines. Callinex Mines is advancing its portfolio of zinc-rich projects located in the Bathurst mining district and the Flin Flon mining district, where nearby operations are actively mining for zinc, copper, gold, and silver. Max Porterfield has over 10 years of experience in natural resources and financial markets, and he was previously with Brazil Resources, Uranium Energy Corp, and US Global Investors. Over to you, Max.
Hi, thanks for having me again. We're Callinex Mines. We trade on the Toronto Venture under the ticker CNX. And again, we're focused on VMS exploration within known Canadian mining jurisdictions, most notably the Flin Flon district of Manitoba, where really 80% of our capex is going to be going to our rapidly expanding Rainbow discovery that we'll go over in detail. But in addition to that, we do have assets that I'm not going to be able to get to just for the nature of time. In the Bathurst district of New Brunswick, we have a PEA stage zinc lead asset at Nash Creek. That we have emerging silver discoveries, and then we're also working on an updated resource at our Point Leamington deposit in Newfoundland, which is going to be a pit-constrained gold, zinc, copper, open pitable resource within a mineral lease. With that being said, before I get into Manitoba in terms of cap structure, the company currently has 13.1 million shares outstanding. We've recently completed a financing of 8.88 million. So cash in the treasury as the most recently updated financials is 8.44 million. We've got 2 drills turning on site, so your monthly burn is roughly $500,000 right at this given time, and that's going to fund 30,000 meters of drilling. In terms of shareholders, myself and my family are the single largest shareholders of the company. We control collectively just north of 15%. We've got very large institutional investor support, most notably Resource Capital Funds owns 6%. Delbrook owns roughly 3%. A number of family offices participate in the recent financing. The Savellis out of Europe own roughly about 7 to 8% as well. Without further ado, we'll discuss Manitoba because that's where we have a rapidly expanding Rainbow discovery. In the Flin Flon district, again, this is an area that's been mined for over 100 years of continuous production. And the 777 mine that you can see that's right in the town of Flin Flon is due to shut down in Q2 of next year. So this is, again, a near-term problem for that community and that infrastructure. Again, it's got a capacity of 5,000 tons per day. And Hudbay has been very clear that they're looking to go from over 750 jobs right now down to just 50 jobs by 2023. You're talking about a town that just sits roughly about 6,000 people. So this is very, very big in terms of their future. We see on the screen here is the black dots show the prevalence of mines. Again, there's 32 mines in the Flin Flon district and counting. And our technical team, I should note, has been accredited with the discovery of 3 of the 4 largest mines in that camp's history, with the exception of the original Flin Flon ore body. So we're going to focus in terms of where the Rainbow discovery is at the Pine Bay project to the east there that you can see. And that's where we've made that discovery. So we can flip over to the next slide. Now, Pine Bay sits just 16 kilometers away as a crow flies from the town of Flin Flon. It's got direct road access from the town of Flin Flon with an all-weather road. So it's a 20-minute drive. So very, very close access. And from a geologic perspective, the last true operator, Placidome, had opined for a 30 million ton exploration target. To give you a perspective, that'd be the second largest discovery ever made in the Flin Flon area. Would that be discovered? And the reason why they had that exploration target in the area is because the area encompasses the largest felsic rock package that's been mapped at surface in the Flin Flon greenstone belt. And the importance of that is, again, 90% of the ore ever mined has been hosted in these felsics. And that, coupled with a very large alteration system that you can see kind of drawn out in purple there at surface, is what led them to opine for that 30 million ton exploration target. And the reason for that being that there's a direct correlation to the size of your alteration zone, which is your volcanic event in your correlating deposit. So with that being said, we've made the rainbow discovery. We can just skip over to the next slide there, just underneath the power line. And it actually sits right within the mineral lease. So we have advanced permitting, given that you only need a water license to go into production. As you can see, that's kind of outlined in this white area that's taken over this area there. And then in terms of this discussion earlier about this shift away from the hydrocarbon to environmentally sustainable growth, ESG, and that being a real key component of that is not only where is your, that you're going to be having copper and the demand for that in batteries, but also what is going to be the power source for your mining operation. The reason why I bring this up is that the power line there is a hydroelectric power line, so high voltage power that runs just over the property. So what we've hit in terms of the rainbow discovery today, we've got 6 holes into that. You can see it's highlighted in terms of a plan view before we look at a long section by exceptionally high grade copper. The global average copper production grade is roughly 0.5%. On a total basis so far, we're looking at 5% copper equivalent, predominantly copper, but we also are getting over 1 gram per ton gold on average, as well as zinc and silver. So with that being said, we've since done a surface pulse EM survey to the south of that power line. And you can see all the historic drilling is void of a drilling to where that rainbow discovery has been made. And that shows some anomalies to the south that we're actively drill testing as well. And can we just jump over to the long section? So this is a long section view again of the intercepts that we've hit. And some of these holes that we're hitting well north of 10% copper equivalent. Some of them are hitting north of 8% copper, but consistency on average, you're talking over 5% copper equivalent. To give you a perspective, in the camp, the very large ore bodies, with the exception of the original Flin Flon ore body, the large ones occurred at depth. So for perspective, the 777 mine was discovered at over 800 meters vertical depth, which is where our PBM 111 that's in that fuchsia plate that was our first discovery hole. And we've got a drill on site right now that's drilling, and the focus of that is going to be to delineate and vector closer to surface. The Lawler mine, which is in production in the Snow Lake area of the camp, that was discovered 800 meters vertical depth, and that was ultimately came within 550 meters of surface, which we've already, our most recent round of drilling that we announced earlier this year has shown that it comes up to that level of surface. So the next round of drilling that we'll be announcing in the next coming weeks, and we're talking within the next 2 weeks now, more than likely, is going to show the potential for this discovery to continue to come closer to surface. And again, it's going to be open up until now as we move to surface and then at depth, where a lot of these discoveries really expand, notably the 777 and Lawler mines, as well as Trout Lake. And those are the 3 more recent discoveries in the camp's history, starting from 1982, 94, and then 2004, that have been the anchor for production in Manitoba in the Flin Flon Snow Lake jurisdiction. So with that being said, again, we have 30,000 meters of drilling, news flow consistently going to be coming out of Manitoba between now and the end of the year. The goal of this is to show a standalone SIPA deposit, and that would be at 10 million tons, assuming a 3% copper equivalent is kind of your threshold for a standalone operation. And obviously that would open the door to a number of suitors, but that's the near-term goals, 10 million tons, with the ultimate goal to go north of 20 million tons and be a big anchor mine for that community. And in addition to that, we will be drilling in New Brunswick with our near surface silver discoveries that I won't talk about right now, just because of the nature of time. But we are going to be having roughly a 15-hole campaign in New Brunswick. That'll encompass 3,000 meters to follow up on the near surface silver discoveries that are, again, above the cutoff grade based upon the 2018 PEA of the Nash Creek deposit and the assets in New Brunswick. So with that, I'll take any questions.
Sure. Thank you very, very much for that. I'll start off with a question of my own, Max. I was looking at your website a few days ago, which really emphasizes the technical experience of your team. Can you perhaps elaborate a bit more about your expertise there?
Yeah, so we're obviously focused on the exploration side of the business, and with that, I don't have an exploration background, so obviously the first things you need to do is seek out the best of the best in that regards. And in terms of VMS exploration, I do think that our team stands out. Our former chairman and founder of the company, Mike Maslowski, is a member of the Canadian Mining Hall of Fame for the discovery of over a dozen VMS deposits in the Flin Flon district's history. he's credited the biggest discovery of his career is the Trout Lake discovery that saved the town of Flin Flon in 1982, and that was when the 777 mine, the original Flin Flon mine was due to shut down, and they were in real pressure there. And ultimately, Hudbay acquired that, and that was the big anchor mine for that community. Up until when Jim Piquel, working for Anglo, head of Anglo's VMS arm, won the Bill Dennis Award for the 777 discovery, which again is in production today. Jim's been credited with the number of discoveries in the Flin Flon in his district's history. The largest again is 777, Canuto Lake, and a number of others. And then Alan Vowles, former chief geophysicist for Hudbay, credited with 4 discoveries in Flin Flon. The largest, he won the Bill Dennis Award for the Lawler mine. That's been production in the Snow Lake area, the Flin Flon Snow Lake Greenstone Belt. And then our exploration manager, J.J. O'Donnell's second generation exploration is out of Flin Flon. He's actually born in Bathurst, former senior mine geologist for the 777 mine, and former VP exploration for the Howard Pass zinc deposit in the Yukon, which is one of the largest undeveloped zinc deposits in the world.
Okay, thank you for that. Alain from Commonwealth Bank of Australia. Any thoughts on the project or questions for Max?
Yeah, I guess I'll probably have one question for Max in terms of permitting and local engagement. Could you comment a little bit in terms of engagement with First Nation and how you guys are tracking regarding potential signing an IBA, or and also on the permitting side as well?
Yeah, so in terms of Flin Flon, there is no First Nations that we need to consult or engage. That's historically been the case in Flin Flon. You got to keep in mind that the Pine Bay deposit project area that was actually permitted in the 1960s for the Pine Bay deposit. There's a historic shaft on site there, as well as that mine road was put in for the North Star mine that was due further off to the east. So to that end, in Manitoba, the First Nations and the duty to consult, is certainly not something that we've had to deal with historically. And then in terms of New Brunswick, in Manitoba, in terms of permitting, you're looking at a 2-year permitting timeline to go into production. And also, I should note that the community and the government's very well apprised of the need for a discovery for that community. We did receive a $300,000 grant from the government of Manitoba for the Rainbow discovery and help advance that, given that it has the potential to expand the life of that infrastructure and that community's needs. Now in New Brunswick, in terms of permitting, we can get a provincial EIA for the environmental impact assessment for the Nash Creek deposit, and that'll be the 3-year permitting time horizon there. If it goes over a certain production size, then you go into a federal permitting regime, and you're looking at 5 years. But I think the approach would probably permit a smaller footprint, and then look to expand that permit once you receive that. In terms of First Nation consultation, there's an organization called the MTI that we've got a very good relationship with, and they're very supportive of mining, given the fact that the Brunswick number 12 mine was the largest underground zinc mine in the world until it shut down in 2012. And the Bathurst district is just like Flin Flon, world renowned in terms of its base metals extraction and kind of rule of law and understanding of mine development within the province.
Mm-hmm. Thank you for that. Bringing in Jim from McFadden Research. Any questions or comments?
Yeah, how about just 3 questions? First is, when do you think what's the timing of when we'll see the first assay results from your 30,000 meter drilling program? Second is the $8 million plus that you raised. Does that fully fund that program? And third is, does it make sense for a company your size to have projects in Manitoba is the real focus? It seems like. Does it make sense to have investments in New Brunswick and Newfoundland as well? Can all 3 do all 3 make sense in terms of management's allocation of time and resources? Okay,
so yeah, absolutely. So remind me though, the first question in terms of the drill results. The drill results you're going to have out before the end of the month, and then you're going to have steady news flow all year. In terms of the $8.88 million that we raised in capital, there was $5.5 million allocated to fund the 30,000 meters. And so that's fully funded. The 30,000 meters is fully funded. In terms of the campaign in New Brunswick and budgeting, we did allocate $750,000 that was raised as earmarked in the Maritimes. And that's going to be roughly $400,000 on that's conservatively will fund 3,000 meters of drilling at Nash Creek in New Brunswick. And then that'll also will fund the work that needs to be done in Newfoundland to that end. In terms of your question regarding focus, really we call it the 80-20 rule in terms of Manitoba. But if you understood the kind of a little bit of the history of the company, when I came on the company in 2014, it was actually a graphite company at the time with those exploration projects in Manitoba. We went out and actually acquired those assets in the Maritimes at the bottom of the zinc cycle, seeing as a real opportunity. And we did that with less than 5% dilution. And we acquired all those assets with $1.1 million, primarily in stock. That'd be priced over $5 a share today on this the cap table, and because we did a restructuring in 2019. And so if you look at the value creation we feel that we can get out of the very limited capex that we have going into those provinces, I think it makes a whole lot of sense. In New Brunswick, again, your cost of drilling is all in, you're looking at about $115, $120 a meter. And your holes in New Brunswick are 200 meters. So you can, what that's going to do is it's going to fund testing 10-kilometer strike where we've had those 2 silver discoveries that I alluded to. So we made silver discoveries by testing IP targets in New Brunswick. Those came out, the best hole was 28 meters of basically 60 gram per ton silver, 0.2 zinc, 0.1 lead. Within that had a higher grade interval of 100 gram per ton silver. And then 6.8 kilometers to the south of that, we again hit well over open pitable grades, zinc, lead, silver. And then we did a soil sampling campaign to follow up on that, and we saw anomalous silver along that entire trend. And we're able to go out and test that all for $400,000, and then very quickly, at low capex, be able to drill that out. In terms of Point Leamington in Newfoundland, the total cost on the updated resource is going to be roughly $50,000. We've got a dozen airborne EM targets that we can really low cost de-risk, just like we've done in New Brunswick. And then of course, the bulk of the capex is going to go to Manitoba. But things have shifted dramatically because Manitoba, that discovery hole occurred in August of last year. And up until that, we had to take a timeout in Manitoba because we had hit a discovery hole in Manitoba in 2016, didn't have the ability to replicate it, and realized that we needed to do a vectoring tool. And actually, we've got to credit our experience that we had in New Brunswick with IP that led us to bringing back IP in Manitoba that led to the Rainbow discovery. So the assets are all very critical. At some point, are we going to look to divest and partner those assets? Absolutely. But we want to be able to realize the biggest upside, and then de-risking those assets from an exploration standpoint. We'll be hitting some holes out there before partnering up a better valuation on each asset base.
Terrific. Thank you very much.
Thank you very much for that. I think kind of throughout all 3 presentations, we've heard kind of one of the questions I'm quite keen to ask also the 3 panelists, so all 3 mining guest panelists. Probably starting off with yourself, Mac, is what is Callinex's ESG credentials?
Well, I think the biggest thing for Callinex in terms of the Rainbow discovery is that if you look in the future, I do think that just like other commodities, you are going to be traded based upon your ESG or your environmental footprint of the product source. So oftentimes you look at an electric vehicle and the idea that you're going to be driving an electric vehicle, but you don't know where the metals are actually sourced and how you're produced, because oftentimes there's a lot of diesel, coal, or what have you that's actually powering those mining operations. So really, what is the footprint to that? So given the fact that the infrastructure is really already in place, that's not going to be any kind of new footprint. The operation in Manitoba is going to be an underground, which is obviously going to be more favorable from an environmental footprint standpoint. And your potential production source is going to be exceptionally high grade power. It's going to be low cost clean power. I think it's going to be very, very low relative to a lot of the other projects that are actually being developed in exploration that's being done. Because I think a lot of these projects that are very, very remote, that have big upfront capex, have obviously been very, very challenging. But from an environmental standpoint, as it's going to be more considered in the future, it's going to, I think, put us in a very, very nice position.
Mm-hmm. And same question to you, Matt. What are your ESG credentials?
Yeah, so as I mentioned during my presentation briefly, we're making a 68% magnetite pellet feed. So for those that aren't familiar with the iron ore sector, you typically have what's called an iron ore fine, and that fine material then needs to be sintered, which means you basically fuse the sand into rocks, and then you put those rocks into a blast furnace to make steel. And that sintering process is extremely emission intensive. In our case, we're making a pellet feed, which is like a very, very fine sand. And because the ore is magnetite or magnetic iron, when you heat magnetite, it actually has an exothermic oxidation reaction. So in layman's terms, it gives off heat and reduces the amount of energy to then make a marble or a pellet. And when you put those pellets into a steel mill, you have substantially greater throughput and much, much lower energy consumption. So on an all-in net basis, we cut the greenhouse gas emissions by circa 30%.
And same question to JC Potvin of Murchison Minerals. What are your ESG credentials?
Well, I do the project would be an underground mine, so it would have a very small footprint, basically a ramp designed to go down. We're looking right now at ore sorting, so we're trying to remove as much waste mineralization or non-economic mineralization out of the feed before it goes to the mill. Now there is an existing gold mill about 40 kilometers away by road to the south of us, and it's inactive. It's mothballed. It's got all the facilities, camp and power and so on. So there's a possibility of perhaps negotiating a deal with the owners to use that and just add some flotation cells to make a concentrate. The concentrate would be trucked down to Prince Albert and put on a rail and either go to Flin Flon or to Sudbury or to Trail. So it's when I left Rabbit Lake last year, I went onto the GPS on the truck and I said, okay, I'm going to Saskatoon. And the lady on the GPS said, turn right, and then in 432 kilometers, turn left. So it's pretty easy. You can't get lost.
Well, I think on sort of like that note, that brings us up to the hour. So I think over the course of the last hour, we've had some really three great projects with all offering very, very different but fantastic investment opportunities. All that remains for me to do is to go and thank Jim McFadden, Alain Halimi, Max Porterfield, JC Potvin, and Matt Simpson. To go and thank our sponsors, Murchison Minerals, Black Iron and Callinex Mines, as well as the Resource Global Network. See you next time. Until then, stay safe. Thank you very much.
Thank you.